typically on Thursdays, and we haven't done one of these sessions in a little bit, but we're going to be talking about one of the biggest components to finding consistency with your trading and overall becoming a profitable trader. So we're going to be talking about a lot of key aspects here, and we have a lot of new members in the FTME group. We have a lot of new members in the Discord, and I think it's just a good refresher for anybody that's been with us for a good amount of time, because this is it. This is, when you talk about the meat and potatoes of trading and finding that consistency, finding that getting to that stage of being a profitable trader, and then getting to that point of optimization and scaling. What we're talking about today is everything. And you're gonna see, if you don't know why, or if you don't know what I'm talking about, it will all make sense today. So we're going to be diving into this topic today. I have a couple things I'm going to bring up and share on my screen, and a lot of good stuff to talk about. And one of the great things is, we have a lot of these tools that can really help you transition through the stages. I refer to these stages as the stages of a trader's evolution, where you have stage one. This is the ground floor. This is where, you don't know what you don't know. You're either starting out trading, or you're new to a strategy, whatever it might be, and you're going through that learning process. You're trying to find your identity as a trader. You're trying to find that edge within the strategy, unique to you, right? And then you're trying to transition overall to stage three, being profitable, but you have to pass through that stage two. And this is that neutral zone. This is when you transition from stage one into stage two, and you go from seeing, losing trades, not seeing, a positive result at the end of the month, even though that shouldn't even be a focus. Like, there's a lot of components to this, and you'll all make sense as we go through this. But when you get into that neutral zone, that's where you see your account start to balance out. You might end up the month slightly in profit or slightly in negative, right around that break even. And although that might seem like a negative and it's not where you ultimately want to be, that is a positive, because it means you've transitioned, you've extracted strengths and weaknesses, and applied that to that next sample size, into making those edits into your trade plan. And you rinse and repeat this. But the biggest component to this is collecting the right data and being able to use that data, focusing on specific stats to extract key information, KPIs, key performance indicators, strengths and weaknesses, patterns within yourself as a trader, patterns within your emotions and your mindset. And then you're taking those and you're making edits, and then you're applying to the next sample size, and it's rinse and repeat. But it's important that you have the right approach and you're focusing on the right things based on what stage you're in. And that's where most people drop the ball. So we're going to be talking about a lot of stuff pertaining to this stuff here. Let me see. Let me just make sure this chat is up here. For some reason, it always just disappears on me on this phone when I try to pull it up. But end of the day, that's what backtesting is all about. Finding patterns within yourself as a trader, finding patterns, within your execution, your markups, your mindset, your emotions, and your overall performance. It's the key component to effective trading system and trade plan development. And more importantly, like I mentioned, this is how you're going to find your unique identity as a trader and your unique edge using these concepts. And the crazy thing is, and tell me if this sounds familiar, tell me if this relates to you. Most people, whether it's some trading educator or something you're finding on babypips.com or something on Instagram or YouTube, whatever it might be, most people will simply tell you that you learn a strategy. You start executing these trades on a demo account. You record the trades you take in a trade journal. And most trade journals are very generic. The date you took it, the time you took the trade, what the pair or currency or asset was it a buy or sell, Here's the entry price. Here's my stop loss price. Here's my target price. And then the end result, what the P&L, the profit or loss, and then maybe include a snapshot, right? So they'll have you record the trades that you take in your journal on a very generic, basic journal. And you do this until you see consistent returns. Then and only then are you ready to start trading with real money on a live account. Who here relates to that? And who here, that's what you've been told. Like, that's what you believe is going to, take you to being a consistently profitable trader. Like, that's the process. If that's what you've been led to believe, that's the process from going from ground floor to profitable, drop a 7 in the chat. And I can promise you that is most likely why you're not where you want to be. It's an extremely flawed approach. And the majority of the trade journals that I see and that most people are accustomed to, things that I use, basic, generic trade journals, that information is not going to get you where you want to go, right? I have studied how to track and measure trading performance for years. And one of the biggest reasons I saw early on for most traders not being able to find their footing and see any real progress was due to their tracking or lack thereof. Every single high-performing and successful trader, company, entrepreneur, athlete, marketer, whatever it might be, lives and dies by their KPIs and their stats, their numbers. That's how companies are able to thrive, right? You're looking at shopping cart abandonment rate, the MRR, average customer value, right? All these different, factors and stats, cost per lead, right? What's the average value per customer? All these stats, like, if you don't know your numbers, you can't ever expect to see high-level success, high-level results, and then let alone be able to scale that business. You have to know your numbers. You have to know your numbers with trading. It's extremely important. In every trade that you enter, let me just pull up the chat. So I see a lot of 7s dropping. I've been taught that, but don't believe it. Yeah, I mean, it's the majority of things out there. Like, that's the process. That's what they tell you the process is. I've never heard anyone teach KPIs for trading. Well, I mean, that's why, and we're going to get into that, and we're going to be talking about the stats that you need to focus on. Every trade that you enter, whether good or bad, you have to recognize that it's a learning experience for your future success. So it's extremely important to see exactly what went well and why, what went wrong and why, to see what your strengths and weaknesses are, patterns within your trading, patterns within your mindset and your emotions. And without the right data to focus on, traders are just often left spinning their tires in the mud, or no idea how they even got into the mud in the first place. And every single person, and this is what you have to understand, every single person is unique. There isn't a one size that fits all. We all have different personalities, different belief systems, different risk tolerance, different opinions, a different approach to the market. We all see things in the market based on these things. And I've worked with countless people on a large scale and individually, and I've seen crazy things. And let me tell you a quick story. Like, one of the stats that we focus on is buys and sells, and then what the stats are for individual buys and sells, whether it might be a lot of losses from selling opportunities, a lot of break evens from selling opportunities, a large percentage of wins come from the opposite, and then the type of execution, whether it be market execution or the pending orders, and what the correlation to those with those winning or losing trades are based in sell or sell or buying environments, right? Those can be extremely important stats. So I was working with somebody, let me tell you a quick story. I was working with somebody, he was a good friend of mine. He was introduced to me through my first trading partner ever. And he told me about, and this guy was a profitable trader, and he told me about his friend who's just very motivated. He's catching on to trading really quickly, but he was stuck. And I became really good friends with him, and I started working with him. And he got to a point where he was in the neutral zone, break-even zone. So he had a big span of months where he would end up slightly in profit, break even, or slightly in negative. It was always right around that. He couldn't get traction, but he was protecting his capital at the same time. He wasn't ending up with major losing months. So I end up looking at his data and going through his trade journals for that. I think it was maybe 4 or 5 months of those type of results. And I went through all of the different stats that I personally track, which you will see those today. We'll talk about all of those today. And one thing that I noticed was, out of all of his buy and sells, primarily limits, sell limits, it accounted for a large percentage of his wins. And a large percent of his losing trades came from buying, specifically market execution. So I pointed that out to him, and I said, man, look at all of these stats for your selling opportunities. It looks like you're just crushing all of the sells. You're viewing the market in a bearish environment much more easier and more effective than you do in a bullish environment. He extracted this information that I presented to him. This wasn't even something he was paying attention to. He was using a very generic and basic trade journal. And I'm just trying to make a point here, how one little thing can have a dramatic impact on your trading results if you're paying attention to the right stats. So he took this information and he did realize that he can just view the market much easier in a bearish environment. And he focused on selling opportunities, eliminating his weakness. He extracted a strength and a weakness there, and then applied it to his trade journal to move forward to his next sample size. Less than a month, well, just about a month later, that's where he saw a significant jump in his stats, but that's still a relatively small sample size. That's starting to pull away. Then he goes on to have 3 more profitable months of double-digit gains. And he's been a full-time trader ever since. That's what he does full-time. And it made a huge impact on his life. I actually went and visited him and saw him out when I was in London. What was it? Maybe, was it a year and a half ago, roughly? Yeah, it is really dope. So, I mean, it was just one little thing. That thing that I just referenced right there, that is literally why TradingView comes with the option to invert your charts. If you didn't know that, you can right-click on the price on the right-hand side, and there's an option that says invert scale, or you can just go to TradingView, click on the chart, and press Alt-I. And it'll flip the screen. So if it's in a bullish environment, you can invert the scale and it will present it to you in a bearish environment. That's literally why that's there. But most people don't even track something like that. They wouldn't even notice something like that. So it's important to make sure that you're actually focusing on the results that are going to bring change. If you keep focusing on, the strategy and that overall win percentage at the end of the month, right? You're not going to go anywhere. Everybody, like I said, is unique and has a different approach. And you have to be able to identify the stats or the KPIs that are going to make the difference and bring you into that profitable stage. And this is a process, when we're talking about back testing, this is a process of using the data that you've collected in a meaningful way to improve your trading performance. And journaling every single trade. This will not only keep you accountable, but it will allow you to use this data to further your understanding of the markets, the strategy that you're using, and yourself as a trader. And by journaling your trades, you're easily able to find areas of improvement in your day-to-day trading performance. For example, overall analysis, entry, stop loss, placement, targets, management, emotional state, etc., whatever it might be. Without having that current data feed, it's impossible to do proper and continual self-review. So it's really, really important. So what I'm going to do, and this one other key thing too, before I bring up and we talk about key stats that you need to focus on, there's who knows the different things that we need, that there's 3 different forms of data collection that we need to have. Who knows what they are? There's 3 major forms of data collection that need to be back tested. Who knows what they are? Who can tell me what they are? And this is another big one that most people aren't aware of either. And the great thing is, right, we have a trade journal that you all have access to right now. This trade journal was custom built, and in my opinion, the best trade journal that you can probably get your hands on. This thing could sell for 4 figures easily because it tracks everything, and it's specific to our strategy, our methods of trading. And it tracks every key stat that you need to become a consistently profitable trader. And it can show you all of the totals, all of the averages for all the stats that we're going to talk about. It will show you graphs and charts. It's a really, really powerful trade journal. And I have one that is a really good example of how to find strengths and weaknesses and how to apply that to your next sample size. I have a really good example that I'm going to show you. So plan, journal, biofeedback. Is it patterns, entries, and targets? So it is the trade journal data. It's your chart snapshots, and then your market biofeedback. And your market biofeedback, we'll touch on that. So the charts, right? You're focusing on a couple different categories. We're going to get into all the stats. Don't worry. We're going to talk. I'm going to show you all the stats that you need to focus on that the trade journal provides for you. Trade data, SWOT analysis. Yeah, well, the SWOT analysis, which is also available, the SWOT analysis is used to backtest. That's something that Fortune 500 companies do. Also, we literally, EFX, we hire a company that does a SWOT analysis and helps us have a perfect P&L, that golden ratio, and show us all the numbers and all the percentages and what's allocated to what, and identify strengths, weaknesses, threats, and opportunities. We have a company that we pay that does that and gives us monthly and weekly reports. When you're talking about trading and doing this full time, you have to treat this and set this up like a business. You have to. And that involves running a SWOT analysis every single month. So you're back testing, using a SWOT analysis, and using other methods. We're focusing on the trade journal data, chart snapshots, and then the market biofeedback. And I would highly, highly recommend that you do this with a trading / accountability partner, because they can help point out things that maybe you can't see. They can point out your strengths or weaknesses or areas that need improvement, and especially really good for the market biofeedback. But when we're talking about charts, give me 1 second. Let me just do something real quick. It's getting hot up here. Trade data, SWOT. Yeah, the SWOT analysis is awesome. And we can look at that if we have time. But that's one of the assets that's available. And the crazy thing is, like, this is the unseen side of trading. This isn't something that is fun to do. This can be time consuming, but this is what is necessary if you want to achieve high level success as a trader. If you have goals as a trader, however small, however big, this is a necessary step. You have to recognize that. So when we're looking at charts, there are a couple categories that you want to focus on. And one thing that you can do to organize your chart snapshots in these categories, who here has heard of Trello? Finding a trading partner isn't that easy. It is. I'm not calling anybody out, but it's as simple as raising your hand. There's a group here, Forex Trading Made Easy, that we're streaming live into now, that has almost 5,000 members. Everybody here knows what trading is or trying to learn how to trade. They know what Forex is. And it's as simple as making a post, raising your hand, saying, hey, I'm so-and-so, this is where I'm located, this is my time zone, I'm looking for a trading / accountability partner. So you can use Trello. Trello is a free web-based platform. You just go to Trello.com and it can organize to-do lists. It can give you these, you can create columns and you can paste snapshots into these columns. So what I would recommend is having columns for winning trades, losing / break-even trades, and then missed trades or did not trigger. And then you can put the snapshots, the correlating snapshots in each column and also add notes to them as well. And it can help you organize. And I like doing that. And then I also like printing out my charts. And one key thing with your chart snapshots, it's important to be very detailed. And I'm talking about slapping a text right on the chart and writing out your confirmations. And you want to take a before and after. If you choose, you can also include a during, right, when you're working on the trade management. And then you also want to include a higher time frame. That way you can see the surrounding environment that you executed the trade in. And then you want to take notes and write anything of significance that is going to help you when you come back. Because the worst thing that you can do is take some trades in the beginning of the month, quickly document them, take a half-ass snapshot with no notes, just focusing on like a 15-minute time frame. And then a month later, when the month is over, you go back to review your charts and you don't know what is what. You don't know what the surrounding environment looked like. You don't know if the higher time frame is bearish or bullish or it's ranging or whatever it might be, problem areas, potential reversal areas. You just don't know. And then that's going to force you to go back into TradingView, load up that pair, and then go back to the time and hunt down when you took the trade. So just make your job easier. So you want to get very detailed and you want to have the before, after, and higher time frame. And then you can categorize these snapshots based on those categories I just mentioned. And these snapshots in general will help you to identify your edge within the strategy. They'll also help you to stick to good setups and avoid less than optimal setups. They'll train your eye to know exactly what to look for. Ultimately, you're using these screenshots to refine the characteristics of the setups that you're looking at, figure out what's working and what's not working. How do the best performing setups differ from the worst performing setups? Find those common patterns between these, right? So you can look, for example, right? Your winning trades are going to have a lot of winning and losing trades will hold a lot of weight. Who knows why? Who can tell me why? Who can tell me why? Well, yeah, those are good. Those are good. Well, like your winning trades, that's gonna help you reveal your strengths and patterns and surrounding environments that you trade most effectively, things that you can see easily. Your losing trades are going to hold a lot of weight too. They're going to reveal your weaknesses, patterns, time frames, and market environments that just don't serve you well. And depending if the trade was a loser, but the directional bias was correct, right? That can help you, that can suggest refining your entry process or confirmations. Maybe you missed something, or used the wrong structure point or candle, or maybe you took entry on a candle too soon. Maybe there was equal lows below your buying opportunity and you just missed that, or imbalance and the manipulation wasn't there, right? Because finding the directional bias, that is a key thing. And if you got the directional bias correct, but you lost the trade, and that's another key thing when taking snapshots, especially the after. When you take an after snapshot, it's not, oh, I got stopped out of the trade, it's a losing trade, I'm just going to take a snapshot. Because what information is that going to hold for you? It's basically the exact same snapshot of the before. It's just showing you that you got stopped out of the trade. Does that make sense? So what you need to do is, before you take that after snapshot, and this can vary depending on the time frame that the setup is on, you want to let price play out. So for example, if I have a buy setup and I take my before snapshot and then I execute the trade and the trade loses, price pushes down, fills my position, but stops me out, I'm not taking a snapshot immediately after, because I want to see what price does. Just because I got stopped out, it doesn't mean my directional bias was wrong. So I want to let price play out. Let's say it's a 1 hour, 4 hour time frame. I will let price play out for maybe another day or two, and then I'll come back and I'll take an after snapshot. So for example, if I have that buy set up and I get stopped out of it, and it only stops me out by, let's say, 10 or 15 pips, and then goes flying to my target and beyond, that is a lot more key information present than if I just get stopped out and I just take a snapshot of price going through my stop loss. Does that make sense? Because then that can suggest, okay, I got my directional bias correct and I got stopped out. So let me investigate this further. Let me go into the chart and see if I missed something. Maybe there was an area or a gap below my entry. Maybe this was a trap that I got caught into. Maybe the manipulation hasn't occurred yet. Maybe I misplaced my entry point or my stop loss point, whatever it might be. That is what's going to hold valuable information for you. So you don't want to take the snapshots too quickly. Data collection is useless if you can't determine what you can do better next time. Absolutely, absolutely. And then the same thing with, maybe, trades that you got taken out at break even. Was moving stop loss to break even valid in the first place? Maybe you did so too early based on emotion or fear or a dollar amount. And then trades that didn't trigger can help you refine your entry technique. Maybe you could have entered at a better price point or done something completely different. Maybe you missed something. So again, snapshots in general, they're going to help you identify your edge within the strategy. Does that make sense? Let me tell you another quick story here. And this is what opened up the door for me with backtesting and made me start taking it very seriously. So before I started trading with Smart Money Concepts, the first strategy that I had success with, that I actually struggled with for a decent amount of time at first, was a strategy called the bounce back strategy. Who here knows that strategy? Does anybody here know that strategy? I'm sure some of you do. If you followed me from the other group, that was the primary strategy that we focused on and that I ended up educating on. Oh yeah, I tried that one too. So listen to this story real quick. So this strategy, it relied heavily on indicators. And when I say heavily, it looked like the Las Vegas Boulevard. It had a ton of indicators, Bollinger Bands, parabolic SARs, three or so moving averages, three different Bollinger Bands to be exact. It had a ton of indicators. And the idea behind it was when price was heavily extended, and we're measuring this with the Bollinger Bands. The further into the Bollinger Bands, the better. Kind of like an elastic, it was too extended and you're looking for it to come back to its medium. And that was measured with a 50-day moving average. That was primarily the target. And this concept worked. Don't get me wrong, but it was lacking in criteria. And I was lacking in consistency with my results using that criteria. And this is how my backtesting journey began. It looked like the solar system. That's funny. Never heard of it, never seen it. So this strategy was actually taught to me by an 8-figure trader who used this strategy. And he might have actually been the creator of it. And the concept worked, don't get me wrong, but this criteria just either was lacking in general or just was, for me, just didn't work. So that's where my backtesting journey really began. So I took all the trades, and I was using a pretty basic trade journal at the time. And I was taking snapshots. I was very big on taking snapshots. And I started to analyze the data and the snapshots from a backtesting perspective with the end goal of fine-tuning that specific strategy, the bounce back strategy. And what initially prompted this investigation for me to dig deeper was a pattern that I recognized in many of my snapshots on successful trades. So I started to hone in on the details. In my case, I was focusing on the 4-hour price action because this was the time frame that initially kind of triggered my desire to dig deeper on this. So normally execution with this strategy was initiated from the flip of a parabolic SAR. If you don't know what those are, they're the little dots that run underneath price. And when price pushes through it, it will flip and put a SAR on the top. And that can signal on higher timeframes, reversals, or continuation moves. So that's how you would get triggered. And we actually even had software for this that could read the SARs, and when it flipped through the SAR, it would trigger you into the trade. And I wasn't having success with this approach, using this criteria. So once I had enough data, it was easier to spot overall patterns and create more detailed rules and criteria for this strategy. And my findings allowed me to create categories, three different variations rather, an A, B, and C. And this clearly showed me which variation of the strategy had a higher success rate. So I could place more focus on that. Just like I pointed out with that, my friend who his variations were the buying opportunities, which were primarily market execution, which he didn't even recognize, and the selling opportunities, which were primary sell limits, he had much greater success there. So he had two different variations, and then he was able to spot the variation that had the better success rate that he could focus on and eliminate the other variation. So guess which variation worked best for me? Take a stab at what variation worked best for me. For me, it was a lot to follow and keep up with, very busy. Yeah, it was overwhelming for sure, especially if you were new to trading and you had all of that stuff on your charts. I think I still have some of the templates. So the variation that ended up proving to be successful for me, let's see if anybody got it. Well, it wasn't just the higher time frame. It was the variation that included the 4-hour pattern that I was spotting, that produced the best result. So I noticed a certain pattern in combination with the extension of price into the third Bollinger Band on a 4-hour and daily time frame. And then after a daily flip and identifying that pattern, it proved to have the best results over a bigger sample size versus the other variations. And I would run these together, and it was very easy to spot the difference in the results. So this pattern I spotted within the strategy, this is what initially made me a profitable trader. And guess what? Guess who else really spotted this and was a big player in me becoming a profitable trader initially? Take a guess. Yeah, my trading partner. Absolutely. He was able to give me an external point of view and his perspective looking from the outside in. And he picked up something that I wasn't able to spot. The same way that I was able to spot something. Now, granted, this was information that I was one of the things that I look for. And if you're in the community and you look at any of the backtesting trainings, you know that's one of the things that we look at. But that wasn't something that he focused on. So having me, an external pair of eyes, look at his data and what he was doing, I was able to spot his strengths and weaknesses that made him go on to be a profitable trader, just like my trading partner did for me. And then I was able to take it a step further. That's why I can't stress enough to have or get a trading partner / accountability partner. It's even more so important to have that for the accountability factor. And I'm not talking about a trading partner to say, hey, what do we got cooking up today? Do you see any setups? Like, send me your charts so we can find some trade setups. That's not the best use of a trading / accountability partner. So then the next part of the trade journal, which is included, we combined this. We had it its own separate thing and we merged it into this trade journal, is the market biofeedback. This is the third thing that you need to backtest. The fundamental role of a trader's psychology tends to be very underestimated, and too much emphasis is usually placed on the technical side or the strategy side. And both are essential, but arguably the right mindset, that's what differentiates successful from unsuccessful traders. Who here agrees with that? If you agree with that, drop a 5. If you disagree with that, drop a 4. And here's something that I want you to write down. If you've ever gotten important advice from a trader who has achieved high-level success, listen to what I'm about to tell you, because this is going to have a huge impact on your trading if you understand what I'm saying. I see a lot of 5s coming in. Hold on one sec. One sec. Hey, do you have that thing? Sorry about that. I'm dying of thirst. Okay. So here it is. And I want you to write this down. And it might sound very simple, but this is going to have a huge impact on the end result. It's not becoming a profitable trader that's important. You have to understand that. It's the person that you need to become in order to be a successful trader. And I'll say that again. It's not becoming a successful trader that's important. It's becoming the person that you need to become in order to be a successful trader. You need to become a completely different person. You need to develop behaviors that have a positive impact on the bottom line. And you have to develop discipline and patience. And most importantly, a top tier trading mindset. You have to be able to receive that success, right? Why do you think you have all these people who win the lottery and then a matter of years later, they're broke and they're back to working a job? One, they didn't earn that money and they weren't the person they needed to be. They weren't ready to have that high level income. Just like most people are, honestly, right now, raise your hand. Do you think you are ready to receive high level success from trading? It's the same thing if, people want to get onto these live accounts. Well, okay, and they want to do this too early and based on a small sample size. Well, okay, what happens if I give you a $300,000 account? Are you prepared for that? Do you have the mindset for that? Do you have the discipline for that? Are you able to manage your emotions on an account that size? Or would you just end up blowing that money? Would you just end up getting kicked off the account and just consistently losing money? So it's about the person that you need to become in order to be a successful trader. And if you've ever needed a huge piece of advice to getting where you want to go as a trader, that's going to be it. After 4 years, I'm getting there. No, I'm not ready, but working on it. They didn't grow to meet the money. You need to become the person who you really want to be, on the verge. And that's what the market biofeedback is all about. The market biofeedback is basically a journal to discuss the different stages of a trade and the emotions that are present, the fears that are present, something that might cause hesitation, something that might cause anxiety, something that might cause stress. 9 times out of 10, when I go through trade journals and I'm back testing the market biofeedback, and I've used this example many times before, working with people on a one-on-one basis when I used to do that a long time ago. There would be data that I would look at on their trade journal, in their market biofeedback specifically, and the emotions and fears and thoughts running through traders' minds in the before when they're analyzing, because you're going to have, when you're marking something up, and then you're going to have stages where you're about to set a buy or sell limit, and then you're going to have the stage where it's price is pulling into your entry zone and you have to click the button buy or sell. Right? Who here lets setups fall through their grasp all the time? And you either see a really good setup, but next thing you know, price is running off without you, and you didn't execute the trade and it just slipped through your fingers. Or that you get into a trade and it gives you initial bounce and then it starts pulling back into close to your entry, but by now you're already break even because the fear of loss is greater than what the trade can produce. And you get stopped out, and then next thing you know, the trade is running to the profit without you. That is a direct correlation to a market biofeedback. And do you have an example for a market biofeedback? It's built in, and I'm going to pull one up right now. So I'm going to talk about 2 things really quickly. I'm going to show you a journal that is done pretty well and how they extracted strengths and weaknesses using the journal that we've created. And then we're going to talk about some key stats. So what I'll do first is we're going to talk about the key stats. So everybody get a piece of paper and a pen or something, be able to take these notes. And if you have to, you can come back, watch the replay. And there's a decent amount. And so I'm not going to go through all of them, but we're going to go through a good chunk of these. And I'm not going to get too much into what all of these mean, but we have tons of training on this stuff. So a lot of you have access to this. And it's, there's got to be 20 different important stats in front of me. And then I'll pull up the trade journal from members in the community who send me their trade journal to review for our backtesting live training sessions, where I go through personally and backtest material and show how it's done. So there's a really good journal that I want to use as an example that you should be following this model and what they're doing, because it's a really good example. I'm becoming the person I need to be a successful trader. Daily progress. Nice. Good stuff. All right. So everybody ready? Everybody have a pen or pencil and a piece of paper or a way to write these down. And if you're driving, you'll have the recording to come back and get these if needed. So again, right, when we talk about the stages of a trader's evolution, and I know this sounds like a lot of stuff, right? But you have to be backtesting and have the right approach to the backtesting and data recording based on what stage you're in. So what I mean by that, and that's why some of these stats here, they're not going to apply for everybody at different stages. So, you know, when you're looking at a win percentage or the number of trades executed, that's not something that you focus on in early stages. Early stages, when you're in stage one, ground floor, winning and losing trades or trying to get the tightest entry or trying to get the biggest reward on the risk to reward isn't your focus. If you focus on wins and losses, you're just going to get jammed up. You need to be focusing on two main things in this early stage. And that's first, trying to train yourself to think in probability. And the only way to do that is to not focus on the result and see how the results play out statistically, meaning that you can have 25 trades executed, 5 wins, but see a positive 15% end result. Because it can be one of the most meaningless statistics in trading, but you need to know your win percentage, because when you look at your average risk to reward, which is another key stat that you need to pay attention to. For example, my sweet spot, my average risk to reward is 1 to 5 risk to reward. That means I need to have at least an 18% win rate to be a profitable trader. So based on your average risk to reward, what's your average win rate? And what's the percentage to be break even based on your average risk to reward? So my break even percentage for 1 to 5 risk to reward is 17%. So anything 18% and above makes me a profitable trader. Know your numbers. You have to know your stats. If you don't know these stats, how are you going to move forward? But you have to be, yeah, Mark Douglas, absolutely. I highly recommend you watch Mark Douglas. His 4-part video series, Trading in the Zone. I read Trading in the Zone at least twice a year. I haven't read it twice this year, but I've read it once this year. I try to read it. And it's important to always go back to the information like that, especially Trading in the Zone, because when you read it the first time at ground floor stage, and then you read it again when you're in the next stage and your journey is 12 months in, right? You're going to be a different trader, and you're going to receive information differently than you did the first time you read it at the ground floor level. Like me, 9 losses in a row, but still passed my free FTMO. So that's another perfect example, right? So my FTMO, you guys know, I just did my first FTMO challenge just so I can get that personal experience. I've always used private investors. I still have my private investor. I'm still on those accounts. It was mainly to get the experience so I could better provide training and content and strategies for the members, because this is going to be the biggest way for our members to become well-funded traders. That they'll provide $10,000 to $400,000 worth of trading funds at a profit share, 80 to 90% of profit share. So, you know, I went through that and I passed both stages. I'm on the live account now. I have a goal of 10% a month. And still, that's part of the stats. Know your numbers. If you're trying to make at least 6 figures a year, on what size account and what percentage would you need on a monthly and weekly basis to achieve that goal? So if you're trying to make $100,000 or 100K a year, and you're on a $100,000 account, that means you need to average at least 2.5%, at least roughly 10% a month, give or take, to, I think that would equal out to, without compounding the account, $96,000 a year pre-tax. So know your numbers. So that is, I basically just hit that today. I'm just under the 10% 4 days into the month. And I've been transparent with that, and I've shown the stats, I've shown the account, and I can pull that up as well. But to pass my first stage, I won third, and these numbers are slightly skewed because you have X amount of trading days that you have to fulfill. They have 10 minimum trading days. So for example, phase 2, I passed in 3 days. So I had to open and close trades for the next 7 days. So that stat was slightly skewed, but I averaged right around 50% of my trades, 50% win rate for phase 2, and I passed phase 1 with a 33% win rate. Just for some perspective, my average win rate is right around 50%, 50 to 60%. But I'm perfectly okay with the 30% win rate. I'm knowing that I average minimum. I don't even take a trade if it's under 5 to 1. So I know I need at least 17% just for break even. So here are some of the stats that you need to focus on. I'm not even going to talk about the first couple because for most people here, you're in a stage that these stats don't really. So I'm going to filter out some of these stats based on the assumption that most of you are probably in stage 1. So you want to look at the total number of stop loss or total number of losses, and then look at why. Stop loss hit caused by economic events. So that can suggest that red folder news events that you stay out of the market. Then you're looking at correlating losing trades with incorrect or correct directional buys. And we already went into detail why that's important. Then you're looking at how many different pairs were traded, and you're focusing on the best and worst performing pairs. If you have a watch list that's 5 to 7 pairs and you see indices are the cause for a huge percentage of your losses, and you see EU and GU are the reason for the majority of your wins, well, you know what to eliminate and you know what to focus on. Then you're looking at the best and worst performing execution method. Now, historically, based on working with a lot of people in private settings and on a large scale, the majority of people are going to have more success with pending orders versus market execution. And I would recommend that. Market execution, it's still like the approach, right? When you focus on the approach for transitioning through the stages, in stage 1, you're not focusing on lower time frames. You're not focusing on market execution. You're focusing on higher time frames, getting that directional bias correct, and training your mind to think in probability, adapting the casino owner mentality. So you want to look at the execution method. What execution method is serving you best and which aren't? And like I said, the majority of the time, market execution, because that is going to require you to be present and watch the price action. Most people find themselves micromanaging the price action. Fears can come in, cause hesitation, and you can end up missing trades. Versus setting a pending limit where you see the setup, it's already developed, you have your confirmations, you run through everything, you find your entry spot, you set a sell limit, maybe set some alerts, and you go about your business. You can't see when it's triggered. The trade that I passed for my FTMO, a gold trade, set, I did my confirmations, I found my setup, figured out my entry, figured out my target and what I needed to pass. I set the trade. It triggered when I wasn't available, and it hit TP before I even woke up. I wasn't even there to interfere with my trades, because I don't care how good you are. If you interfere with your trades, or if you're micromanaging, 9.5 times out of 10, you're going to make an impulsive, emotional, fear-driven, or greed-driven decision that is going to hurt you in the long run. So you're looking at the best and worst performing execution method. Then the same thing with the time frames, right? All of this stuff is tracked. When you have to enter a trade in this trade journal, it's asking for all of these things. And you can, I'll even do this. Let's share my screen and I'll show you that trade journal, and then we'll wrap this up. So you can see here, you got the date. So when we're talking about the next stats, right, we're looking at the best and worst performing market session, day, week, month. Okay, so that's why when you enter your trade, you double click this box here and you select, okay, today's Thursday, the 4th, I select that. It's going to show day of the week, Thursday. It's going to show week 1 of the month. And this is important because historically, again, based on working with a lot of people, seeing a lot of trade journals, most people have shitty results week 1. And the majority of that reason is because it is an extremely manipulated week, a ton of news events, red folder news events, Wednesday, Thursday, Friday. You have FOMC, you got NFP, all red folder news events. And then also the last week of the month, right? This is where smart money is reaching for their bigger targets. It's a lot more volatile and crazy price action. Typically, for most people, their sweet spot is week 2, week 3, but that's going to be different for everybody. So if you see week 1 over a decent sample size is a reason that you see, let's just say you look at 5 months of trade journals, and every single week 1, you're just having a tough go. And you're getting, it's putting you in the hole to start the month. And week 1 to start the month, this is where, you need to shine. You need to be on top of your game, because you don't want to come into week 2 trying to dig yourself out of a hole. So if you see historically that you just have a tough go in week 1, this can suggest not trading week 1, or just waiting for cream of the crop setups, or lowering your risk from your average 2% to 1%, or your normal 1% to 0.5%, whatever it might be. If you don't take this data for what it's telling you and make the appropriate changes, you're not going to be able to transition through the stages and get to where you want to go. It's all about extracting your strengths and your weaknesses and your patterns as a trader and with your thought process. So then you can fill in the time, and then we're talking about the pair. So you select the pair, and then the time frame, right? We're talking about the best and worst performing time frames for the same reason. If you see lower time frames, you're getting slaughtered, but you see really good results on the higher time frame. Well, guess what that suggests? Stay away from lower time frames. So we track the time frames. Let's say this is 15-minute. Then the session, okay, New York, London overlap. So you can see for somebody, Meg, right? He's going to be my first student to reach 7 figures. He does very well in Asian session. He's located in Australia. This is when he is awake. This is when he is alert and has the most energy. When we used to try to trade together and he would stay up very late to try to trade New York, London overlap, well, guess where he wasn't seeing the best results? Trading when he was tired, out of energy, wasn't alert, and wasn't focused. So guess what? You eliminate trading New York, London overlap, and you focus on the sessions that are producing the best results for you. Then we have the buy or sell, but you're talking about the type of execution. So it could be a buy limit, sell limit. This is all important information so you can find which ones are serving you best and which aren't. Was there a news event, right? We want to know if a lot of your losses are coming from a red folder news event. So we'll say no for this one. And then you'll also notice we're not talking about entry price, stop loss price, or target price, because those stats are absolutely meaningless. But the size of your stop loss, the size of your TP are very useful, right? So if you see your average stop loss is 10 pips and you are getting smoked on your stop losses that are 15 pips or less, but you're seeing good results with stop losses that are 20 pips or higher, that is very key information. So we track that. So let's just write 40 pips. And then your targets are very important too, the size of your target. So if you average 5-to-1, but you have 2 different variations, 5-to-1 where your average TP is 100 pips, and then another situation where you have a variation of 1-to-5, but you have 200, 300 pip targets. How often are you actually, what's the percentage of you hitting the targets for both variations? Are you seeing a higher percentage of targets actually achieved in variation 1 with a 100 pip target and not even coming close on that bigger? Well, that is key information that might result in lacking in the trader's mindset, micromanaging, not being able to hold trades long distances. If you average 300, 400, 500 pip targets, but you have a 10% target achieved ratio or percentage, that's not going to serve you well. If you're not holding trades that distance, why even go for them? So that is beneficial information. Here is where we enter the higher time frame, before and after snapshots. And then we're talking about the pattern. Which type of pattern are you doing the best with? So we have, this is specific to our strategy. signature pattern, our flag pattern, our double mitigation, other, or none, whatever it is. You can also write it in here. So for the same thing, if you see that you're doing very well with flag patterns and not so with signature patterns, well, you know which patterns to go with. And then here is the bias, correct or incorrect bias, right? Very information depending, even if you win or lose the trade. If you lose the trade, but you have a correct bias, that is very good information. So we'll say we lost this trade. We risked 2%, and you can see how it automatically calculates my risk to reward for that trade, which would be 2.5 based on 100 pip target, 40 pip stop loss, and then it will say my gain. And then we can say the exit. How did I exit this trade? Was it a TP hit, stop loss hit, trailed stop loss to break even too early, adjusted SL and increased risk, whatever it might be. So we're just going to say stop loss hit. Here is the market bar feedback. This is where you're entering in your emotions and the fears and what you're feeling at the different stages of the trade. And then you have your notes. Okay. So what I'm going to show you now, is what happens when you enter this in and then you scroll to the bottom. And this is where we find a lot of the cool stats. So here you can see that it starts populating everything. And based on what you check or uncheck, it will show you the stats. So you can see the bias, correct, incorrect for the cells. So you can see if I click the win rate, I can see, I can't click or unclick this because it's in view only mode for this person's trade journal. But it can show me my win percentage with buys and sells with, and then I can click the losing as well. It'll show me the percentage for that with the correct or incorrect bias. Then it'll show you for each session, wins, losses, break evens, whatever it is. And then we can scroll down to exit outcome. We're looking at TP's hit. He has 1 TP hit, 6 stop loss hit, and 4 due to change in the market, 1 just missed entry. And then you can see it formulates these little nice graphs here. Then you can see time of the week. Week 1 is one of his weak weeks. He doesn't do well week 1. So guess what? He doesn't trade week 1. Week 2, you can see his losses, his wins, his did not triggers, his break evens, etc. And then you'll have a weekly summary. Same thing with down here. We can look at the wins, losses, break evens, did not triggers, and we can see our total stop loss, total TP, average stop loss. His average stop loss is 19 pips. His average TP is 95 pips. His total risk to reward is 60, but he averages a 5-to-1 risk to reward. That means he needs at least 18% to become a profitable trader. Then we have the same thing here. We can look at the different stats and get a nice little graph here based on the different execution types. Same thing with the time frames. We can see the best and worst performing time frames. We can see the wins and the losses, or the did not triggers. He has the wins and did not triggers for the time frames, and it gives them a nice little graph here. Same thing with the pairs. We're looking at the strong pairs and the weak pairs. Pulling that, he has 6 unique pairs traded. So you might have, when you're looking at backtesting, it's very similar to a funnel. You're throwing a bunch of things in a funnel with a filter, and you're extracting and removing the large material that cannot pass through that narrow bottom. And then you're taking this information, it can be a broad range of information, and then you're refining it. So you might start off stage 1 trading 5 pairs, 3 different patterns, taking 20 trades a month, right? And then at the end of the process, when you reach stage 1, you might be trading 2 pairs, 1 pattern in a very specific market environment, refining that entire process. So here is the important part, and I don't see enough people doing this. At the bottom, you have a summary and then the goals for next month. This is goals for next month / edits to the trade plan. So you can see he basically takes all of the information that he's gathered in the bottom with all these charts and averages and totals, and he writes out any key information, strengths, weaknesses, etc. Right? You can see 100% of my trades that were incorrect bias were losers. 3 of the 4 were euro odd. You can see 33% of my losses were on the 45-minute time frame. 80% of euro odd trades were losers, whatever it might be. And then you can see the changes he's making to his trade plan. So adding to my plan, no stacking under any circumstances. Adding to my plan, while a trade is active, if higher time frame EC is created against my position, take profits, no negotiation. Are we still good? Can you guys still hear me? Or did it freeze up? What's the signature pattern? It's all in the training in the guide section in this Facebook group. But everybody can still hear me. I think I might have froze up briefly. All right, so you can see the goals for next month, his plan to edit his trade plan and to apply on to the next sample size. He's removing euro. I would have thought he would have removed euro odd, as that accounted for the majority of his losses, but it's his thing here. He's removing euro USD from his pairs because he's refining his pairs. He's refining his time frames, his patterns that he's trading, etc. Finding his edge, finding his identity as a trader. He's adding to his plan these different things. Adding to my plan that before any pending or trade is set, the pullback must be established first, because the bottom or top of any pullback is most likely the place to see an EC being created, which would then invalidate the entire setup. And then he says, fifth, you need to go back to only selecting the trade setups that you feel confident in, right? So he has a lot of good stuff there. He also has a really good market biofeedback. So I'm going to scroll up really quickly. And you can see here, right? He's talking about, you know, how he's feeling. This morning, I was feeling full of anxiety because it was a rough morning with the children. I had a lot of going on with work, master's degree in trading, but I'm here showing up. This trade meets my confirmations, etc. Right? So he's talking about all these different things that he can then review. So a lot of really good stuff here. So, you know, we're obviously looking at a number of stats. We're looking at average target and pips, average stop loss and pips, average risk to reward, best performing and worst performing stop loss and target size, stop loss management, maybe moving stop loss to break even too early or stop loss hit. What is the reason for it? Number of trades manually closed. What is the reason for it? Percentage of targets achieved, correlating with the size of the target. Percentage of stop losses hit, correlating with the size of the stop loss. So do you guys see how this information can be beneficial, can be vital to your success? You're running through these sample sizes, recording this information, focusing on these stats to extract strengths and weaknesses, to then make the edits to your trade plan, to rinse and repeat, to apply to the next sample size, but maintaining the right approach based on what stage you're in, which is the only way you're going to transition. And you can't jump from stage one over stage two and become a profitable trader. It's a process. I've never seen somebody go from losing, new to trading, and just boom, I'm a profitable trader. It's a transition. It's a process. And this gets you through it. We obviously don't have the time. We're already running almost 90 minutes. We don't have the time to go through, you know, the stages of a trader's evolution or any of that stuff, or get into the actual back testing. But we covered a lot of good stuff today. Was this call helpful? Did you get value from today's call? Do you see the importance of recording the right information and back testing? And we're only scratching the surface here. We didn't even talk about the SWOT analysis or how to use it. We didn't even get into how to back test the market biofeedback. And we didn't obviously get into all of the stats or the approach and focus and objectives that you need to have based on if you're in stage 1, 2, 3, or 4 scaling, because this is the same process that you use for optimization and being able to scale once you're a profitable trader. It's a lot of information, but this is running a business. This is what we do with EFX. This is what I've done with every business I've run. This is, you look at any successful business, you look at sports players, you look at Tom Brady, NFL players, there's a reason why they watch tape of opponents, of their practices, of their games, to look at technique, to make adjustments, right? Like scientists, they do the same thing. They record their hypothesis and all these different things and their different test variations so they can see what works and what doesn't. It's any high level success comes from documenting what you're doing so you have something to measure. And then you can take those measurements and make the appropriate changes to get the end result that you're looking for. This has been very encouraging, fuels my confidence that losing is normal part of, yeah, everybody lose. I mean, you know, winning and losing isn't important in trading. And people will tell you that differently. And it might sound crazy, but you know, it's risk to reward, right? It's knowing your numbers. That's what's important. I can be a profitable trader based on my stats. I know what my average win rate is. I know what my average risk to reward is. I know the percentage that I'm averaging on a monthly basis, right? In terms of win rate, right? That's, you know, all numbers that are very beneficial. It's not about how many trades I win or lose that's going to define my end result. And the lower the risk to reward, the higher that percentage goes up, the better the risk to reward. I mean, look at 5 to 1. 5 to 1s are very achievable, right? I mean, we have traders that smack 15 to 1s, 20 to 1s. Those are not uncommon, but how often are you hitting them, right? Are they serving you best, right? My sweet spot's really right in that 1 to 5, 1 to 8. But I know minimum I'm looking at a 7. I don't take anything under 5 to 1. So I know I need at least 17% of my trades to produce a target. And again, this is static too. There's other variations, and we're not talking about taking partial profits, which is something I don't normally do. I manage my trades completely different. But again, early stages, stage 1, you're not managing your trades. That's not the goal. You add management in later, and then that's a whole other set of back testing. So there's a lot to this process. Does it suck? Absolutely. But you know what doesn't suck? Being able to trade full time, doing this to be able to provide for your family, being able to acquire a skill that I know nobody can take away from me. If all else goes to hell and my businesses fail and, you know, I have no other means of making money, I always have trading to fall back on. And it opens a lot of doors. It allows you for other investing, right? I mean, it's a beautiful thing to have. So does this suck? Yes, but it's temporary. Once you do this and you get to the other side, it's worth it. And then you don't have to go through all this. I already know my numbers. If anything, it's just about optimizing and being able to start scaling. So it's something that you just have to do to get through those stages. Once you get to that stage 3 profitable, right? I mean, you don't have to do this intensive back testing anymore. It's just, you know, small refinements and fine tuning. But it's definitely not fun to do, and it's not time consuming. But if you do it, sky's the limit. Sky is 100% the limit from that point on. Again, as always, thank you for challenging us to keep numbers. One thing that I was not ever taught well. It's such a big key component. And it's just one of those things. I did not do this early stages of trading, but then I was scratching my head, wondering why I wasn't getting the results I wanted. If you treat this like a hobby, expect results that reflect that. If you treat this like I show you how to run trading like a 7-figure business, because that's what I have here. So if you set things up and you treat things a certain way, you can expect that result. It's the law of attraction. What you put out is what you receive. If you set up your business like a 6 or 7-figure business, well, that's the type of results that you will achieve. But I hope if you guys got value from today's call, drop a fire emoji in the chat. Emma just popped in to say hi. You say hi?
Hi.
Time for a nap.
Mm-hmm.
How's your finger?
Feel better.
A little better. Let me see. Can I give it a kiss? Okay. Let me see.
How do you move this? I can see.
Yeah, you gotta move your hair out of your face so you can see. See all the people? Look, there's 65 people watching you right now. See, they're all dropping the little fire emojis.
What's that red button for?
That says we're live. You say hi.
Hi.
All right. Well,
I was They can hear me.
They can hear you, but you just can't hear them. All right, everyone. Well, I hope you enjoyed the call. Hope you got value from this. We're going to wrap this up here. We have another call tomorrow. So all members in the private community, we have the live trade session tomorrow for the NFP news event where myself and my trade partners who I normally trade with every single morning, we're going to hop on like we normally do. And we invite the whole community to hop in and watch what we do, listen to the conversation, observe the mindset, watch us execute anything if there's something available, and we can execute that in real time. And you know, it's a lot of fun and it's a good learning experience. So I will see you all tomorrow. Stop touching that. I will see you all tomorrow. That starts at 7:30 a.m. Eastern. That will be dropped in the announcement section of the Discord. Other than that, hope you guys all have a great day. And I got to get her down for a nap. Say goodbye. Okay, she just wants to say goodbye. Hope you guys all have a great day, and I will see you all tomorrow morning.